You've got yourself a chunk of money and you are ready to buy a home. So how much cash are you really going to need? Who gets it and when do they get it? I'm Dylan Bucknavich. I'm a realtor with North&Co. I'm also a husband, a daddy, and a former home inspector. So let's talk cash. You got yourself a chunk of money and you obviously have a down payment, but who else gets it? When do they get it? So let's start with down payment. First of all, if you're a veteran, thank you for your service. You don't owe a down payment. You're getting yourself a VA loan, no down payment required. You can put something down, but you don't need to. If you're FHA, your down payment is most likely going to be 3.5% of the purchase price. There are programs that can cover your down payment, but that's another video for another day. There is a cost of doing that, and it's not as common as it used to be. If you're getting something called the conventional loan, your down payment can be all over the place. It can be 1%, 3%, 5%, 10, 20%. It can be 14.8%. It can be quite a bit, really up to you. But your down payment is not owed until you're at the closing table ready to sign. You'll cut that check and then within 24 or 48 hours you're going to close and you'll own that home. So what's next? What I tell everybody is that it's free to look. It's free to shop. It's free to offer on homes. It's free to negotiate. Your first check that you have to write when you're buying a home is called earnest money. And as soon as you get an accepted offer, you owe it. So it goes into title. They hold it. It's basically a deposit to bring the home off the market because the most valuable thing to a seller is days on market. And if you're taking that home off the market, they want to know you're serious. So you got to put a deposit down. Usually, if you're getting off easy, it's 500 or 1,000, but that's tough to pull off if you're spending more than 200 to 250,000. What I recommend for most finance buyers is you want to put down about 1%. There's no standard, there's no requirement. That's just what I recommend. You can even get more aggressive. I mean, it's up to you. You just want to show yourself as being serious to the seller, especially in this market. If you're cash, you probably want to step it up a bit. I always suggest about 5% because in 30 days or so, you're putting down 100%. So you might as well get heavy with that and get friendly with the earnest money. Earnest money is not gone as soon as you spend it. You can cancel throughout the transaction over certain issues and get that back. And if everything's successful, that money gets applied towards your down payment, towards your closing costs. So it's not an extra fee. After earnest money, we have inspections. That's right, inspections. Because you have your basic home inspection. That's going to run you about $300 to $400. On top of that, you have termite. You can get a sewer scope done, which is money well spent. You can get a mold inspection done. You can have specialists come look at the pool, the roof, the AC, the electrical panel. It's really up to you. Like I said, if you're getting off easy on the home inspection, you're probably at $400 for home, termite, and pool, but probably a little bit more than that. Sewer scope, that's money well spent. That's usually about $150 to $250. And if you don't know, they throw a camera down your drain, underground, out to the sewer, make sure it's still functional and it's not going to cost you thousands of dollars to fix. You can do a mold inspection. When I used to do those, on average, they were about $350, but I've done them for $1,500 too. It really depends on how in-depth you want to do. And with the specialist, with the pool, AC, roof, you're going to do a trip charge in most cases. And you can do that right away, or you can see how the home inspection goes and see who you want to get out there for a second look. So if you're getting out easy, $400 on inspections, but you can get nuts and spend $700, $1,000, $1,500. It's the cost of going under contract, and it's money well spent to realize what you're getting into. So outside of that, now you have the appraisal. And this can go either way. I see a lot of lenders, they roll this into the closing cost. So it's not out of pocket up front. It's usually about $450 to $600. So if you have to pay that up front, ask your lender, they're going to let you know right away. But it's good to know because it's obviously if you got to write that check on week one versus at the closing table, it makes a big difference. So to wrap up, before we get into the closing costs, you're at about $1,500 to $2,000 if you get out easy. That's $1,000 in earnest money, $500 in inspections, but I don't really see that on homes above $250. So I tell everybody go into this with at least $1,500 to $2,000, and that might get it done. Last but not least is closing costs. Or like acquisition costs. That's kind of what we call those. That covers title and escrow, loan processing, HOA fees, property taxes, mortgage insurance, or prepaids, we call those. That can vary. So a couple of factors. A, are you cash or are you getting a loan? If you're cash, you've just got your title and escrow fees. That's going to be $1,500 to $2,500. Throw in a home warranty, and I mean you're out the door under $3,000. If you're financed, a good rule of thumb is usually between 1.5% to 3%. Now there's a myth saying it's going to be 3%, and if you make an offer and you want the seller to pay some of your closing costs, which is a thing in case you didn't know, just to ask for 3%. But you don't want to do that because I've seen closing costs on, let's say, a $400,000 home. I've seen them be $12,000 and I've seen them be $6,000. So the last thing you want to do is ask a seller to pay your closing costs up to 3% and have them reject your offer only to find out your fees are 1.5%. So you can get those numbers before you make an offer. Talk to your lender, have your realtor send the lender everything: property taxes, HOA, purchase price, of course, and then we know exactly what we need to ask for. And that's important, need, because in this market, which is seller heavy, what I advise, unless the home's been on the market forever and there's no other offers, is to ask for what you need, not for what you want. Now, you might get what you want, but you can also lose the house, and nobody wins at that point. And closing costs, just like down payment, are due when you close. When you go to sign all your papers, you're going to kind of check for your down payment and your closing costs all rolled into one called cash to close. And that is it. So I hope that wasn't too much. Hope you found it helpful. If you or anybody you know is starting the process and they want to have a no obligation conversation, reach out to me. I'll be happy to help. And if you're watching this on Facebook or YouTube, give me a like, give me a subscribe. That makes me happy, and you get to stay on top of my videos. Thanks for watching. I'll see you next time.